Welcome to the Friday edition of the Tech Stocks Daily Podcast. We've got a roller coaster lineup today as we explore the trade desk's revenue miss that sent Wall Street buzzing with both bearish and bullish bets, and even some legal drama. We're diving into Apple's strategic steps with an Android app launch and stunning AI features, while new holdings faced a double-edged sword with skyrocketing user growth yet missed revenue targets. Lastly, Five9 dazzled with upbeat financial results thanks to AI prowess amidst a leadership shakeup. Stay tuned for a whirlwind tour of excitement, strategy, and innovation rocking the tech stocks world right now. Welcome to today's Tech News Roundup. There's quite a swirl around the trade desk, a major player in the programmatic advertising scene, and not for the kind of buzz they're likely to celebrate. So, what's cooking with the trade desk, and why is it on everybody's radar today? Let's dig in. First off, we've got a classic Wall Street melodrama where disappointment led to dramatic results. Earlier, the trade desk revealed financial results for their fourth quarter, falling below expectations. Even though they achieved a 22% growth to $741 million in revenue, it was shy of their own guidance of $756 million. When you're sailing as a high flyer trading at valuations of 25 times sales and 157 times trailing earnings, as the trade desk was, missing targets isn't just about shrugging it off and going for ice cream. It's more like a roller coaster ready to dive. Consequently, their shares took a nosedive, dropping more than 33%. CEO Jeff Green tried calming investors, attributing the miss to a series of small execution missteps, and announced strategic changes. They're repositioning to grasp long-term growth opportunities more robustly. But as the big whales of the investing ocean started making moves, a curious turn of events followed. What's particularly juicy here is how those sophisticated investors are reacting. Hold on to your hats, because these guys have entered the trade desk's options market with serious bets. Mixed emotions abound, roughly 58% bearish flavor at play versus a scant 8% bullish excitement. We've got a hefty sprinkle of puts and a load of calls, translating into hundreds of thousands of dollars on the line, with price strategies spinning between $50 to $100. Why the split sentimentality? It's akin to clenching a cup of steaming tea, hoping for a weather forecast. It's about uncertainty, anticipation, and hearts tangled around the trade desk's navigation through stormy revenue plans. Meanwhile, legal sharks have sensed turmoil and launched not one, but two class action lawsuits against the trade desk. The law firms Robbins, Geller, Rudman & Dowd LLP and Bragar, Eagle & Squire PC announced they're clocking in on behalf of investors who sustained losses. They're pointing fingers at the trade desk for allegedly sugarcoating information around their Kokai AI tool rollout, a tool poised to give advertisers a mystical crystal ball. Pundits claim delays and a rocky transition from their old Solomar platform make everything, well, rather unfortunate. Despite the lawsuits, downbeat earnings, and investor theatrics, a glowing projection about programmatic advertising's wild growth potential has steadfast optimists considering the trade desk's long-term worth. The space is envisioned to touch a whopping $117 billion by 2034. Heaps of caution, testing patience, and strategic wagering are keywords guiding market aficionados as they assess whether the trade desk got unusually affordable or remains an enigmatic lift till clearer skies emerge. In a corporate coffee grinder, crushing and blending investor emotions and market forecasts, it's an action cinematic fling and a strategic board game all rolled into one exciting tech saga. Remember, whether you're riding the waves or just dipping your toes, stay savvy and informed on fluctuations and forecasts affecting holdings you hold dear. Keep it locked here for all the latest, and make sure your popcorn is at the ready. Today, Apple made waves in the tech news arena with several significant developments that showcase its strategic expansions and the introduction of cutting-edge features. First up, Apple's expansion of its Apple TV Plus service to Android devices is a noteworthy move aimed at capturing a broader audience. By allowing Android users to access Apple TV Plus through an app, as opposed to a web browser, Apple simplifies the process and enhances user experience. This could boost subscription revenue significantly as the Android customer base is immense, and any increase, even as modest as 1.5% penetration into the Android market, could mean additional revenue of around $2 billion. This strategy not only aims at increasing its current subscribers, but also counseling users to consider a switch to the iOS ecosystem. On another exciting front, the rollout of AI innovation is grabbing attention. Apple's reported inclusion of AI-driven visual intelligence in the upcoming iOS updates, especially for the iPhone 15 Pro, is impressive. This feature can transform how users interact with their devices by analyzing objects, translating text, and providing real-time search capabilities directly from the camera. Although the newer iPhone 16 models come with a dedicated button for this feature, Apple ensures its iPhone 15 Pro users aren't left out by incorporating it into the control center or even allowing configuration through the action button. This move could mitigate the push to upgrade devices just for AI advancements, promoting satisfaction and continued use among existing users. In the global smartphone arena, competition is heating up, especially with Chinese tech giants like Oppo releasing AI-powered folding smartphones at competitive prices. These innovations by rivals like Oppo, as well as other Chinese companies, pile pressure on Apple to constantly upgrade its features to maintain and regain its market presence. Playing into this tension, Apple's engagement with AI partners like Alibaba and Baidu highlights its efforts to infuse AI capabilities into its product lines. Finally, financial analysts are continuing to dissect Apple's financial health and stock viability, noting favorable yet complex indicators. With Apple showing a blend of being relatively undervalued against competitors but concurrently meeting challenges with slower revenue growth, the tech giant still holds strong profitability margins and efficient equity usage. Summing up, today was a solid reminder that Apple remains at the forefront of technological and strategic evolution. With a keen focus on expanding its service ecosystem, innovating with AI functionalities, and navigating fierce competition with prudence, Apple is certainly positioning itself as a dynamic player, ready to tackle both the immediate demands of the market and the long-term expectations of stakeholders. Keep those Apple News notifications on, because the Cupertino-based powerhouse never seems to stand still. All right, tech enthusiasts, buckle up, because today we're diving into the whirlwind world of new holdings. What's got everyone's attention, you ask? Well, the company's stock took a nosedive today following their latest earnings report, and it's clear Wall Street had quite a reaction. New Holdings recently unveiled their fourth quarter financial report, and let's just say it was a mixed bag that tipped more than a few fedoras. The digital banking heavyweight reported a revenue of $2.99 billion for the quarter. Sounds like a lot of cash, right? Except analysts had forecasted $3.29 billion. That gap of disappointment was enough to send investors into a bit of a tailspin, as news stock plunged by a steep 15.7%, landing at 11.25 cents. Now, you might wonder if this revenue dip spells doom and gloom. Not necessarily. In fact, New was busy signing up new customers, about 4.5 million of them in the last quarter. Their total headcount now rests at a staggering 142.2 million users. That's what you call growth, friends, with a capital G, a 22% increase over the year, making them Brazil's third largest financial institution by customer base. CEO David Velez didn't shy away from touting some noteworthy victories. The company marched forward with their high-income strategy in Brazil, expanded their reach in Mexico, and dangled enticing new products like NuCel and NuTravel to reel in users. Their interest-earning portfolio also got a beefy boost, reaching $11.2 billion, and their credit card portfolio soared 28% year over year, not to mention that total deposits surged by 55%. Despite these triumphs, the market can be a tough audience. The missed revenue forecasts overshadowed all the good news, sending the shares into a downward spiral that gave some traders acrophobia. Speaking of trading, behind the scenes of New Holdings' plummet, some financial giants have been making bold moves with their options trading. Our spy on Wall Street tells us that there's been a flurry of activity and notably bullish behavior in New's options market. Apparently, these heavyweight traders are eyeing a price range between $7 and $17, letting the rest of us know they still see a lot of potential beyond today's dips. So while New Holdings might have stumbled today between their explosive user growth and bullish options activity, they're making it clear this isn't their final act. Keep those eyes peeled, as earnings reports and market analyses continue to shed light. Only time will truly tell if New Holdings can bounce back. Stay tuned, stay curious, and keep your investment hats tightly fastened. All right, tech enthusiasts, let's dive headfirst into the latest buzz surrounding Five9. So today, Five9 managed to catch everyone's attention with a report that's got Wall Street doing a little jig. This cloud-based contact center specialist has been making waves with its impressive fourth quarter results, showcased in their bombshell earnings report. Here's why everyone's got their eyes on Five9 today. The company not just met, but absolutely smashed analyst estimates, reporting revenues of $279 million, a sizable leap of about 16.6% from last year. Now, your run-of-the-mill analyst might have been expecting something like $267 million, but Five9 wasn't having any of that lowballing. Adjusted earnings per share leapt to 79 cents, chortling past the 70 consensus like a tech-savvy kangaroo. But what's the special sauce behind these staggering numbers? It's AI, folks. Five9 has been ramping up the deployment of artificial intelligence in its operations like there's no tomorrow. Personalized AI agents have become the new frontline soldiers in enhancing customer interaction efficiency. No long waits, listening to hold music here, just direct-to-the-point AI magic. Further, Five9 is taking a go big or go home approach, transitioning more businesses from legacy systems to its cloud-based solutions. Think remote work enablement, enhanced accessibility, sustainable cost management. They've really laid out a plush carpet for cloud acceptance. Oh, and did we mention profitability? With non-GAAP EPS at 79 cents, beating expectations by 0.9, imagine that ching-ching sound as you scroll. Plus, they've managed to bulk up their operating cash flow to $49.8 million, up from last year's $36.5 million. However, just as the investors were cracking open the bubbly, CFO Barry Zwarenstein decided to throw in the proverbial curveball by announcing his retirement after a solid 13-year run. The transition appears to be quite amiable, with Barry sticking around until summer like a chill uncle, ensuring a smooth handover at your family barbecue. But what's got future prospects shining bright, you ask? Five9 is projecting revenues could peak between $1.140 billion and $1.144 billion, and non-GAAP EPS hovering around 258 to 262 cents. Even into 2025, they're jazzed up about riding along on industry shifts. So how will Five9 navigate this fiercely competitive tech landscape while bolstering their innovation pipeline? We are all eager to see how they balance steering through macroeconomic ripples and keeping the AI train on track. Now, over to you. What are your thoughts on Five9's power moves and AI love affair? Drop your comments below. Let's get the conversation rolling like a chatbot on hyperspeed. Looking forward to hearing your thoughts as always. All right, let's zero in on the trade desk and decide what today's news might mean for potential investors. So put on your stock market thinking caps because we're diving into decision-making territory. Given today's developments, if I were in the investing seat, unlike a Wall Street tycoon but with a decent packet of popcorn, I'd advise holding TTD for now. Why, you ask? First off, the trade desk clearly experienced some turbulence due to missing their revenue projections, leading to that scenic nosedive of over 33%. That's what we in the biz denote as a ouchie. But the thing is, while highlighting these execution missteps, CEO Jeff Green also outlined strategic changes that aim for robust long-term growth. That suggests a potential turnaround, assuming the adjustments gain momentum. Now, here's what's interesting. Over in the options market, there's a flurry of activity around TTD among major investors involving both bearish and bullish bets, indicating they've got a mixed but keen eye on its potential. Investors seem akin to weather enthusiasts measuring the winds. They know there's a storm, but they're betting on the skies to clear up eventually. We've also got these class action lawsuits hinting at potential risks, but these may rest around speculative fringes, assuming the trade desk balances the ship. Compounding that, we're peering at a future in the programmatic advertising sector set to skyrocket into a jaw-dropping $117 billion market by 2034. Long-term possibilities entice, even if short-term stumbles require belly laughs or worry. The caution flag is waving, but as the market often reminds us, patience can be a virtue. Bottom line, unless you're strapped into a volatile roller coaster fan's seat craving fresh thrills, holding on to where the trade desk goes next with carefully calculated watchfulness could provide savvy long-term payoffs. Don't ignore that due diligence meter. Do your own research, consider professional advisory insight, and ensure you're engaging with investments that resonate with your own risk tolerance and financial goals. As always, keep curious, stay informed, and remember, every dip might not be skip-worthy, and mountains know how to placate minds urging rapid hikes. That's it for today, but I'm leaving you with more questions to unravel, friends. In today's whirlwind tech market, it felt a little like a roller coaster, didn't it? We saw some serious headline makers, with the trade desk taking a significant dive after missing revenue targets, creating ripples of both bearish and bullish investments. Meanwhile, Apple made a strategic leap with its cutting-edge features and Android expansion, while new holdings caught a breeze of both growth and setback, heading into a nosedive despite impressive user increases. On the flip side, Five9 radiated some warmth with a smashing financial performance accented by a strong AI focus. It's been a full house of techie twists and turns today. If you enjoyed today's tech market summary and want to keep up with what's next, don't forget to like, subscribe, and share. Make sure to hit that bell icon so you'll know each time we've got the latest catch of tech news ready for you. I'll see you all back here Monday for another dive into the world of technology. Have a fantastic weekend.